The dollar falling today after the Fed's big rate hike, but the Chartmaster says its overall continued strength could be a headwind still for stocks. He's sounding the alarm on one sector in particular. Let's go to the Chartmaster. Carter Worth of Worth Charting. Carter, what do you see?
Sure, all sorts of things. But first, something for everybody today, right? I mean, think about it. Friday, the Dow was down 939 points, and today it's up 932. Here we are, basically unched from last Thursday. Bears, bulls, but still the fight goes on. Staples, consumer staples, let's examine the circumstance in relation to the dollar. First slide. We know that certain companies do a great percentage of their business overseas. So you can see the names here, but these are big names, and all of them have 50% plus of their sales outside the US. And so a strong dollar hurts those type of companies versus United Health, a top 15 company, has 0% of its sales outside the US for reasons that are obvious. The next slide, just as a summary, basically we know the dollar is at a 20-year high, and we know in principle a strong dollar is a headwind for US companies, US stocks, and basically 30% of the S&P 500 sales come from overseas. But then it gets down to which sector maybe is the most sort of impaired by that, and it's consumer staples. And so let's look at a few charts, a few tables. First, what you see here is the EPS growth correlation year over year, sector versus the dollar. And you see it right there on the bottom. Staples have the biggest problem, if you will, when the dollar is strong. And so what I would say is there's a conundrum, and you can see it just as written in this slide. Staples are the single most defensive sector, and yet staples are the single most exposed to a strong dollar. And so if one wants to be defensive, this is an area, and yet the strong dollar is a problem. So look at this ratio chart. This is very telling. This is simply taking staples divided by the S&P, or in this case, the Spider's XLP relative to the SPY. And I've used the 150-day moving average. And this is since '09. There have been 3 other instances when the staples were this extended over trend. And each and every time, they've started to underperform. And I think that's the risk here. And staples would be a favorite underweight for us. And then finally, a chart of the US dollar. We know that when you quickly approach a former high, while it looks like it's going to be a breakout, that's not the sequence. More often than not, before exceeding the high, you have to contend with it. And so we got literally to the penny, to the January 2017 high, and we started backing away. And there was an accelerant today, right? 2-year yields dropping, dollar dropping post-Fed. And so the strong dollar is a problem for staples. We don't like them. We want to be underweight. And we do think that the dollar should pull back here because it's way overdone.
All right. Carter, thank you. Carter Braxton Worth of Worth Charting. Carter was highlighting the relative outperformance, to the S&P 500 for the valuations too, relatively high compared to the S&P. When you take a look at Procter, Kimberly-Clark, Coca-Cola, they're all in the 20s, 26 or so, 28. Procter & Gamble is in the 30s.
Because it's been the place to hide, right? Yeah. You get decently high dividends. You look at it as a defensive type of sector. So if you are going to have a soft landing or a recession or something like that, you probably want to be in these names. If you still want to play that game, though, you can stick with the domestic one. So, one that I am long that I've mentioned before is Altria MO, all U.S. based. They don't necessarily have to worry about the stronger dollar. So that's one way to play it. The other thing I would say is, another part of the rally today, weaker dollar, people say, well, maybe I don't have to worry about the dollar anymore. And so that boosts the rally. So that could go on if we get a weaker dollar in the short to medium term.
Yeah, I misspoke, by the way. Clorox is 36. All the rest are in the 20s.
It's funny. It's part of the argument that Guy makes it all the time, that, now that Apple is a value stock, it trades at a growth stock multiple, and it really does look like a consumer staple. A lot of people, kind of put it in that category. It is not immune to kind of technology, kind of secular shifts, that sort of thing. But, again, if staples are going to have all of that overseas exposure, you got to think about, all right, what's going on in Europe? Are they going to be in a recession soon enough? Because we know that some of the issues there are just worse than they are here, and we don't have a lot of great visibility on when that war in Ukraine ends. So to me, I think some of those staples that do get a lot of exposure from Europe, I think that's probably a tough trade at this valuation right now.
So I think about sort of a derivative of that, a Walmart or a Target that Walmart has some overseas exposure, but the majority is in the U.S., where they have costs that are in those foreign currencies. So that's a benefit to them. So, I mean, I kind of like Walmart here. I like Target here as well for the same reason. Target is entirely U.S.